What's up, guys? It's Morgan from Lynchpin. Been a little while. I apologize. Starting up the businesses is taking a lot of my time, but I wanted to cover today what I'm doing specifically in regards to Netflix and earnings. If you remember or had a chance to see, I did a video a little while back that I was shorting Netflix. I shorted it for a bit. It took a big dip. I sold that position, and then I've kind of been playing it by day trade since then. I've then now entered a short position, but I want to talk about the reasons why before you come at me for being a short on this. So let's get into it. All right, first things first, here's the due diligence in regards to Netflix. This is my personal due diligence and my opinions, so just hear me out. I did a bear case and a bull case. Okay, first up, password sharing, churn, frustration, and pushback from existing customers. This is something that became apparent on social media with the password sharing situation. Even things like needing to connect to your home Wi-Fi every 30 days. You have a college student living out and about, this is an issue. Uncertainty from markets about a recession. Right now, the market's trending sideways. So it's hard to say. 90% of earnings have beat despite inflation and interest rate hikes and everything currently. But the question is, if it's forward looking and the guidance, does the guidance have more effect, especially in a growth stock like Netflix that has started to encounter challenges? Among those challenges, improved competitor competition. Look, you may not think that those others are as good as Netflix, but the truth of the matter is I've heard a lot, and I personally have canceled my subscription to Netflix. I'm not a super fan of much on the platform. Honestly, there's better options out there, as per my opinion. But again, a lot of the other streaming services have been putting out pretty good content, with the exception of, I feel like Disney's been pretty weak in all honesty. Cancellations, cost cutting, and worsening show quality. Again, this is more of the feedback of people online, whether or not that's just a few loud voices expressing issues. But it seems to me that it's a rather widespread acceptance of Netflix isn't as clear a leader as they used to be. And again, canceling popular shows, even though they claim, hey, if it doesn't make us money, it's not a popular show, so we get rid of it. And then outlook issues, meaning, customer churn. Love is Blind, they just had an attempt at doing a live show last night, pissed off a bunch of people. I don't think that's necessarily going to have a ton of impact here, but it's just kind of one more thing to show Netflix isn't, completely away from being able to be criticized or some of those things, because it used to be Wall Street's darling. And that just kind of that negative sentiment. So I posted some of these. Hollywood writers are looking to go on strike, which, to be honest, I feel like the writing for a lot of Hollywood movies and shows has been pretty poor recently. So I don't know whether or not that's a bad thing. But again, password sharing, even a couple of analysts have said, hey, you need to temper expectations with things like the ad rolled out tier. That it's going to take a lot longer than what was expected. And so again, that's kind of the question on the bear case. Now on the bull case, what happens if password sharing actually is a move to increase the revenue and it's actually very, very successful, and a lot of these people are now paying that additional fee willingly? That could be the case. No recession. There seems to be a lot of bulls right now on a lot of the boards and whatnot who seem to think that there is going to be no recession in the economy and everything's dandy. Again, I've spoken in my videos working with actual business owners, different size businesses, different industries. I feel like that's not the case. However, differing opinions exist. So, I'm not perfect. I'm not an expert. These are just merely my observations. Netflix is still ahead of many fledgling attempts. Again, even though live's an issue, Netflix knows what they're doing in regards to streaming. There is some nostalgia attached to them being the first company that really redefined streaming and kind of killed Blockbuster, so to speak. And then, they are engaging in cost cutting, refined strategies, etc. There are some decisions being made there that could really help them out and be a positive. You could look at it as it's just temporary noise that Wall Street's largely going to ignore, and it's business as usual. And Netflix is a growth story and will continue to grow and beats on estimates and has enough positives around it to keep going. So that's kind of the bull versus bears case, in my opinion. So let's take a quick look at the chart. Netflix was all the way up to 700. Previously, it's now trading around 332. Going into this earnings, I don't want to always compare or consider that Q2 is going to be identical to the last Q2, but you see the ability or the potential of a massive move if there is a negative enough sentiment. And me personally, I'm playing 305 puts at this point, hoping for at least a significant gap down, maybe retest the 285 level or something like that. I would not put it past to attempt to get down this 250 level if results were bad enough. Now, again, no one can say yet. No one knows exactly what it's going to do, but these are kind of the key levels. Now, if it does go up, I think it has the potential to go all the way to 400 if they beat seriously. Now, that question then comes, what will my play be? My core position is short with 305 puts that expire, I believe it's May 5th. That's going to be my immediate earnings play. Intraday, I'm playing either calls or puts. I don't care whether it's up or down that day. Wherever the momentum is, that's what I'm going to trade that day. That's just how I play the market. So I have that core position where my overall thesis is it's going to go down, but regardless, it doesn't matter if it goes up or down. I'm going to play it whichever way it is and exit with that profit quickly. Oftentimes those scalp trades, as you've seen on my channel, sometimes it's 5 or 10 minutes, sometimes it's a couple of hours, but normally not much longer than that. Whereas these I've been holding for a few weeks now, and as you can see, it has trended up. So I'm down in that position, but I'm completely comfortable that we could see a dip right back down, and off that volatility, I can make a bunch of money even with the IV crushed. So those are my thoughts. Again, my overall thesis is bearish on Netflix, but I also see what the bull's case is. I get what they're saying. I personally don't buy it though. I think even if this quarter they somehow beat, or it stays relatively flat at earnings and really doesn't go anywhere, it's just another opportunity to short the next earnings is my feeling or my thought right now. Again, that's subject to change over time, never get locked in. That's why I play the market both ways. But honestly, what are your thoughts? How are you playing Netflix's earnings? If you are, are you playing a straddle of some kind? What's your opinion? I'd love to hear it. Thanks for stopping by. Hope to see you again real soon. Bye.